Joining us right now to talk more about all of this is Valerie Grant, Senior Portfolio Manager at AllianceBernstein. Also, Kathryn Rooney Vera, who is Chief Market Strategist at Baltic Capital Markets. Kathryn, let's start with you. We've been looking at these numbers coming in much better than anticipated, and you think it's enough to continue to support the returns that we've seen in the market to this point?
Well, this quarter and next quarter, Becky, certainly base effects are so favorable that this is going to be an ongoing phenomenon, given last year's first quarter and second quarter really was so devastating. I'll add to that that pent-up demand remains. I was looking at household indebtedness over disposable income, and that ratio is at the lowest since the 1990s. So yes, it's already low, but as the economy continues to reopen and people get vaccinated, we should expect additional spending on all things recreational, all things consumer related.
Hey, Valerie, one thing you point out is that growth stocks have really started to pick up once again. You know, we were looking at the value stocks kind of outperform for a little while. But over the last month, we have continued to see some of those growth stocks pick up. And I think for the month of April, if you're looking at the Dow components, Apple and Microsoft are the best performers. Do you think that that condition lasts?
I think certainly that condition can last, but what this really points to is the need to maintain a level of diversification in terms of the kind of exposure you have in your portfolio. Certainly, we did see a value rally earlier in the year. That's been a bit more muted more recently, but the growth and the momentum stocks have continued to perform. So I think it's important to maintain exposure to both. You know, if you look at the consumer discretionary sector, as an example, there are a lot of stocks there that were beaten up and didn't participate in the reopening trade. And many of those, as we come into this phase of the recovery, will probably perform quite well. So I think there's opportunity in value as well as growth in the current environment.
When you look at the semiconductor stocks, they actually pulled back pretty significantly yesterday. I think it was a decline of about 2.5% for the semiconductor index. We've looked at the shortages there, and that could be a big problem, just the shortages in semiconductors, when you start looking at the returns for so many of the other areas, areas that depend on it, things like auto production. What worries you about that, Valerie?
All of that worries me because I think that there are so many industries that depend on these chips, and I think we'll probably hear about that as we progress through the earnings season. You have the automotive industry, obviously handsets and cell phones. There's so many industries that depend on chips, and the shortages, I think, are more acute than people realized and may last longer than expected. So it will be interesting to see which companies have the capability to weather through this by focusing their production and perhaps rationing some of their inventory to their most important customers, and which ones simply may have to be in a position where they are out of stock. So I think we'll hear more about that as the earnings season progresses.
Anything that you would tell investors right now, stocks that you'd be worried about because they won't be able to weather it so well?
I think it's really difficult to have a lot of visibility because you don't know how much inventory that companies have basically on hand. And it's also very difficult to understand how companies are positioned in terms of their manufacturing processes and how flexible they can be. So I think this is a very tough one to forecast, but it's one we'll be following very closely because, again, there are so many different end markets that are dependent on these chips.
Hey, Kathryn, what are your favorite plays right now?
I think there's opportunity in the green energy space. It's been beaten up pretty badly, Becky, since early February, and a lot of the infrastructure spending bill is devoted to green energy efforts as well as healthcare. So those are two sectors that I think can do very well. I also like consumer staples. Consumer staples tend to outperform in what I think is inevitably going to be an inflationary environment, given the combination of variables, which are both monetary, fiscal, and fundamental in nature. So I would say that's probably the best pick. In terms of the barbell strategy, which is our favored strategy in this current scenario, we like offsetting any risk, of course, being overweight equities, going long emerging markets, which are additionally quite beaten up, offsetting that with inflation-protected instruments. I already mentioned consumer staples, which fare well in an inflationary environment, but also tips, even gold, and especially alternatives, which tend to have a low correlation to the broader and more conventional equity and bond markets. in private equity and venture capital, even commodities. So I think, as Valerie said, diversification is very important, but I would add to that inflation protection is very important, which is something, and I think even though we have discounted it, we may not have discounted the proximity of that inflationary effect.
Are you really worried about inflation, Kathryn? Is that a big issue that you're talking about, or you just think that it could be something that's out there, or is something kind of further down the horizon?
It's further down the horizon, but I think it is inevitable. We've seen velocity of money fall off a cliff, and that's the reason why double, triple-digit moves in M1 and M2, which is the monetary base, has had no effect. So one has to ask herself if the velocity of money is going to continue this extraordinary downward spiral, and my suspicion is that no. So I think that inflation, the timing is infamously difficult to predict, but I would say that it's on the 12 to 18-month horizon, Becky, which is why I think inflation protection should be incorporated into any prudent investor's portfolio right now while it's still relatively cheap, and we can position for that unknowable future point, but be ready for it.
Kathryn, Valerie, it's good to see you both this morning. Thanks for your time.
Thanks so much.
Thank you.